All right, let's get right into it. Today, we're decoding a financial shift that isn't just some far-off prediction. Nope, its foundations are literally being built right now. This isn't about guessing the future, it's about understanding the blueprint for a global reset that, according to the source material, is set for 2026. If you have any capital in the markets, you're going to want to pay close attention.
So, this quote right here, it sets the tone for everything we're about to unpack. The analysis we're exploring says this isn't a supply crisis or some random market event. It's an induced systemic deleveraging. Think about those words. Induced. That means deliberate. Systemic. That means the entire thing. We're talking about a controlled demolition of the old system by design.
Okay, so if you're going to deliberately overhaul the entire global system, where do you even start? Well, it doesn't begin with some big, loud crash. It starts with a quiet paralysis. And the first sign, the first real-world symptom, is showing up in the very lifeblood of the economy: energy. And this is where it stops being theoretical. In places like Vietnam and Thailand, we're seeing what the source calls energy lockdowns. But hang on, this has nothing to do with public health. This is about vehicle fleets being parked and people being forced to work from home. For one simple reason: the price of diesel is just too high to afford. It's a brand new kind of control, not a lockdown by government mandate, but a lockdown by your wallet. Freedom of movement is literally being priced out of existence.
But look, this energy situation, that's just the symptom. To really understand the underlying disease, we have to get our heads around a concept that pretty much flips conventional financial wisdom on its head. So let's get to the diagnosis: the inverse crash.
You know, we're all trained to look for another 2008-style crash, right? That deflationary cold fever where the price of all your assets just collapses. Well, the inverse crash is the exact opposite. It's a hot fever. The price of your assets, your house, your stocks, might even look like they're going up, but it's an illusion because the currency you're using to measure them, it's collapsing underneath. The floor is giving way, not the ceiling.
And this little analogy makes it so clear. Just imagine you have a banana. That's your asset. And you use a green leaf to measure its price. That's your currency, say the dollar. Now, one day, that same banana cost 2 green leaves instead of 1. So what happened? Did the banana get twice as good overnight? Of course not. The banana is the same. It was the green leaf, the currency itself, that lost half of its value. Which leads us to this incredibly stark warning from the source. In an inverse crash, if the currency is the thing that's failing, then holding that currency, holding cash, isn't a safe bet. It's actually the most dangerous place to be. The analysis here is blunt, calling it strategic negligence. So if the old system is being torn down on purpose, you have to ask, what's being built to replace it? And this is where we get into the actual blueprint for the new financial architecture. We're talking about a fundamental redesign of money itself.
Let's talk about the plumbing. The old system, SWIFT, is basically a telegram. It sends a tiny bit of information and it does it slowly. But this new standard, ISO 2022, which is quietly being adopted by banks all over the world, it's a complete game changer. It carries tons of data, it settles transactions instantly, and, this is the most important part, it makes money itself programmable.
And what on earth does programmable mean? Well, it means that authorities could send you money with rules already attached to it. Imagine stimulus money that can only be spent on certain things, or funds that literally expire and disappear from your account if you don't use them by Friday. This isn't just about faster payments, it's a tool for incredible granular economic control with policy built right into your digital wallet.
Okay, I know this all might sound a little bit like science fiction, but the source points to a very specific, very concrete date that's intended to be the catalyst for this whole transition. And for that, we have to look at Japan. Go ahead and circle the second quarter of 2026 on your calendar, because that's when Japan's Financial Services Agency, their main regulator, is scheduled to officially reclassify the digital asset XRP. And this isn't some minor regulatory change. It's being framed as the moment a huge switch gets flipped.
So why is this one reclassification so important? Well, the numbers tell the whole story. For investors in Japan, the tax rate on gains is projected to drop from a crippling 55% all the way down to a standard 20%. What does that do? It basically throws the doors wide open for big institutional money to flood in. The argument is that Japan is creating the legal and financial blueprint for the rest of the world to follow. So let's zoom out. We have a new system of programmable, centrally controlled money. That's the mechanism. But what's the ultimate vision?
What's the end game that all this new infrastructure is being built for?
This brings us to a really powerful metaphor: iPhones on wheels. The vision being described is a future where things you own, like your car, are no longer just your property. They become nodes on a network. They can be tracked, traced, and, get this, remotely turned off. It extends that same granular control from your digital wallet right out into the physical world, potentially tying your freedom of movement to your financial and social behavior.
So, to wrap up the whole argument from the source material, the symptoms are appearing in the form of energy paralysis. The diagnosis is an inverse crash, a failure of the currency. The new system, based on programmable money, is already being built, and the catalyst is planned for Q2 2026. The system is built, the switch is planned, which really only leaves one question left to ask.
If you want to keep making sense of these invisible financial systems that most people miss, make sure you're subscribed. And just a quick note for transparency, we did use AI tools to help us process and structure all this complex information. And finally, and this is the most important part, this is purely educational. It is not financial advice. You should always do your own research. Thanks for tuning in.